What is cryptocurrency and how does it work? Cryptocurrency is a form of virtual currency that is decentralized and based on blockchain technology. Although you may be aware of the most well known versions, Bitcoin and Ethereum, there are over 5,000 distinct cryptocurrencies in use. The term digital money is frequently used to describe cryptocurrency. While this statement is accurate, it falls short of capturing what makes cryptocurrency so distinct and intriguing to so many investors. What is cryptocurrency? A cryptocurrency, or crypto, is a virtual currency that can be used to purchase goods and services but is secured by an online ledger and strong cryptography. The majority of interest in these unregulated currencies is for profit trading, with speculators shooting the values high at times. Many companies have established their own currencies, known as tokens, that can be exchanged for the goods and services that the company offers. Consider them to be arcade tokens or casino chips. To use the item or service, you'll need to convert actual money for cryptocurrency. Cryptocurrency is, at its heart, a value system. When investors purchase a cryptocurrency, they are wagering that the assets of value will rise in the future, similar to how stock market investors purchase securities in the hopes of seeing the company's stock price rise. Stock values are based on discounted projections of future cash flows. Because there is no underlying firm, there is no equivalent valuation metric for cryptocurrencies. The value of cryptocurrency is solely determined by investor demand. The possibility of other investors buying the asset or the utility of the cryptocurrency's blockchain is the two variables that determine the cryptocurrency's value. Satoshi Nakamoto created the first cryptocurrency, Bitcoin, in 2008 and introduced blockchain technology to the world. Although Bitcoin remains the most popular cryptocurrency, there are now hundreds of other cryptocurrencies available, including Bitcoin, Cash, Ethereum, Litecoin, Cardano, Dogecoin, and XRP. Because they are alternatives to Bitcoin, they are referred to as altcoins. The emergence of online brokers such as Coinbase, which allows you to buy various sorts of cryptocurrencies, has also been driven by the rise cryptocurrency market. How does it work? Blockchain technology drives cryptocurrency, but what precisely is a blockchain? Because the phrase has become so widely used, its definition and importance are frequently misunderstood. Simply said, a blockchain is a digital ledger of transactions. This database, or ledger, is shared over a network of computer systems. The ledger is not controlled by a single system. Instead, a blockchain is maintained and transactions are authenticated by a decentralized network of computers. Proponents of blockchain technology claim that it can enhance transparency, trust, and data security when shared over a network. Detractors claim that blockchain is inconvenient, inefficient, costly, and wasteful of energy. If a rational crypto investor believes in the power and utility of a digital asset's underlying blockchain, they will purchase it. All cryptocurrencies are built on a blockchain, which implies that crypto investors are wagering, whether they realize it or not, on the blockchain's durability and desirability. On the underlying blockchain, cryptocurrency transactions are recorded in perpetuity. In the form of blocks, groups of transactions are added to the chain, which confirm the transaction's authenticity and keep the network up and running. The shared ledger, which is open to the public, records all batches of transactions. Anyone may look at the transactions on the biggest blockchains, such as Bitcoin and Ethereum, at any time. The process of verifying transactions with cryptocurrency is known as cryptocurrency mining. Mining requires a lot of computer power and sophisticated algorithms, but those who succeed at solving issues with it might receive reward coins, tokens, or transaction fees. However, why do individuals devote computation power to verifying blockchain transactions? They are compensated with the underlying cryptocurrency, a proof of work mechanism in an incentive driven system. Miners are the computers that are working to prove the authenticity of blockchain transactions. Miners receive freshly created cryptocurrencies in exchange for their energy. How to use cryptocurrency. Cryptocurrency works similarly to traditional currency in that it can be used to make purchases and be used to make investments. Purchases. Cryptocurrency may be used to make online purchases as well as to employ individuals to do services. Cryptocurrency traders can be made for fiat currency, such as the US dollar, and then swapped for other digital currencies. You may also invest in cryptocurrencies by buying a certain quantity at a certain price and selling it when the price rises. Cryptocurrency prices are volatile. A cryptocurrency's entire worth or market cap can increase and drastically decrease. Cryptocurrency investors do not keep their funds in regular bank accounts. They have digital addresses instead. These addresses include private and public keys, which are lengthy sequences of numbers and letters that allow cryptocurrency users to send and receive currency. Unlocking and sending Bitcoin requires private keys. Public keys are made available to the public and allow the possessor to receive cryptocurrency from anybody. Bitcoin, without a doubt, has shifted the paradigm. There's never been anything like this before, and it has ushered in a whole new technology, an altogether new platform for investment, and a new way of thinking about money. Cryptocurrencies originated as an anti-establishment grassroots movement, but businesses and financial institutions are already embracing them for their potential to disrupt cumbersome old systems and diversify investment portfolios. The definition of cryptocurrency will continue to develop as new technologies transform the cryptocurrency sector, including intriguing new projects like decentralized finance. Are cryptocurrencies a good investment? Cryptocurrencies may rise in value, but many investors regard them as speculative investments rather than long-term investments. What is the cause behind this? Cryptocurrencies, like actual currencies, have no cash flow. Therefore, in order for you to benefit, someone else must pay more for the currency than you did. This is known as the greater fool investment theory. In contrast, a well-managed firm grows in value over time through increased profitability and cash flow. Some prominent members of the investment community have urged potential investors to avoid cryptocurrency. Warren Buffett, a famous investor, made the following comparison between Bitcoin and paper checks. It's a very effective way of transmitting money, and you can do it anonymously and all that. A check is a way of transmitting money too. A check's worth a whole lot of money just because they can transmit money. For those who believe that cryptocurrencies like Bitcoin will be the currency of the future, it's important to remember that a currency needs to be stable in order for merchants and customers to know what a fair price for products is. Throughout much of their history, Bitcoin and other cryptocurrencies have been everything but steady. For example, after trading nearly $20,000 in December 2017, Bitcoin's value plummeted to around $3,200 a year later. It was trading at record levels again by December 2020. This price fluctuation is the problem. People are less inclined to spend and circulate Bitcoins now if they are worth a lot more in the future, making them less viable as a currency. Why spend a Bitcoin when it may be worth 3 times its current value the following year? Are cryptocurrencies legal? They are without doubt legal in the United States, while China has effectively prohibited their usage, and whether they are legal in other countries is ultimately a matter of national sovereignty. Also, think about how to protect yourself from scammers that view cryptocurrency as a way to scam investors. Buyers beware, as always. How do I protect myself? If you're interested in purchasing a cryptocurrency through an ICO, Check the fine print in the company's prospectus for the following details. Who is the company owner? A well-known and recognized owner is a good indicator. Are there any other significant investors interested in it? If other well-known investors want a piece of the currency, it's a good indicator. Will you have a share in the company, or will you only have access to money or tokens? This is an essential difference to make. Owning a stake entities you to a share of the company's profits. You're essentially an owner, while purchasing tokens entitles you to utilize them like chips in a casino. Has the currency been developed yet, or is the firm searching for funding to do so? The less hazardous a product is, the further along it is. Examining a prospectus may be time-consuming. The more information it has, the greater your chance of finding anything authentic. However, even legality does not guarantee that the currency will be successful. That's a whole other topic that needs a great deal of market knowledge. Beyond those issues, simply owning Bitcoin puts you in danger of theft as hackers attempt to break into the computer networks that keep your money safe. In 2014, a well-known exchange went bankrupt after hackers stole hundreds of millions of dollars in Bitcoins. Those aren't usually hazards associated with stock and mutual fund investments on major US markets. How do I buy cryptocurrency? While certain cryptocurrencies, such as Bitcoin, may be purchased using US dollars, others need Bitcoins or another cryptocurrency to be purchased. To purchase cryptocurrency, you'll need a wallet, which is an internet application that stores your funds. In general, you open an account on a cryptocurrency exchange and then use real money to purchase cryptocurrencies like Bitcoin or Ethereum. Coinbase is a well-known cryptocurrency exchange where you can open a wallet and buy and sell Bitcoin and other cryptocurrencies. Cryptocurrencies are also available via an increasing number of online brokers, including eToro, TradeStation, and Sophie Active Investing. Free cryptocurrency trading is offered through Robinhood. Robinhood Crypto is available in most but not all US states. Should you buy cryptocurrency? I must first issue a disclaimer before answering this question. This is not financial advice because I am not a financial consultant. This is my own opinion, not financial advice. Before investing in any of the various cryptocurrencies available, please conduct your research and due diligence. This is created to help you easily understand the topic with our animated explanations. Cryptocurrency is a highly speculative and volatile investment. Investing in known firm stocks is typically safer than investing in cryptocurrencies like Bitcoin. So keeping in mind all the information I've informed you, the decision is entirely yours.